Hi, welcome into the New Sky Bay first quarter of 2024 asset review. In this video, I'm just going to break down what some of the big market moves were in the first quarter of this year, why that was the case, explained for beginners, and what it all means going forward into Q2 and Q3 and the rest of 2024. Let's get into it. So the first big move you see when you look at if you step back and just look at the entire world of financial markets, the biggest move we saw from a macro market perspective is Bitcoin jumped 70% in the first quarter of 2024, right? It went from trading around 45,000 US dollars to consolidating around, the high 60,000s after reaching a high of, close to 74,000 US dollars, right? So we saw some big jumps in Bitcoin. To briefly just go over everything and then come back to each individual one, gold jumped over 8% in the first quarter of this year. Stock market's up 10%. That's the S&P 500 continuous. The dollar seesawed a little bit, but did actually finish with a bit of a bullish tone to it. And you see there is a lot of support in the price of the dollar here, as there is with T-bonds. So you see these yields definitely being lifted. And obviously right now, as of shooting this video, the 10 years yielding around 4.4%. But to keep this strictly in the confines of the first quarter, it's now around 4.2%. So you have bond yields rising, the dollar rising, the stock market rising, you have gold reaching for the moon, and you have crypto climbing at the same time. Why? In traditional finance, you would expect to see some of these markets maybe not behaving the way they are together right now, i.e. gold reaching for the moon at the same time the dollar's climbing, at the same time the stock market's moving, at the same time bond yields are rising. This doesn't quite make sense through a simple elementary understanding of the markets. And what you have to understand is that there's different fundamentals moving each of these markets right now. Okay? So I'm just gonna get into this for the rest of the video, just to break down and explain what's happening for beginners and what it all means going forwards. Okay, so the first thing is Bitcoin. 70% gain in 3 months, okay? And that's nothing even when you zoom out. You see from a year prior, I believe it's something like 300%, something ridiculous. In fact, I can check for you right here. Let's go for 1 year. Yeah. I'm sorry, look at that. You have to laugh. Yeah, that's a 140% gain in a year. Okay, that's quite legit. That's quite funny. So why is Bitcoin jumping? Well, Bitcoin and the entire field of crypto got some pretty big endorsements from some big traditional finance players. Think BlackRock. So there's an enormous amount of sort of validity being added to at least a speculative value in crypto. The hardcore crypto enthusiasts have been sort of beating the drum of its fundamental value for a very long time, and obviously that's a discussion for another video. So crypto did very, very well in the first quarter of 2024, up 70%, and mostly on the back of sort of speculative validity given by enormous traditional finance players, What we have next is gold. Why on earth is gold reaching for the moon? It's beginning the year trading around, the low 2000s and then reaching up into the 2200s by the end of Q1. What is strange, and what I said at the intro here, is that you would often expect gold to decrease, when the dollar increases, because gold is traded in US dollars. It's the exchange rate. What this tells you, the story that this is telling you, is that the fundamentals that are driving gold's ascent are different to the fundamentals driving the dollar, right? So the dollar is increasing off recession concerns being pushed back on the calendar with all of the strong data we're getting, sticky, awkward inflation readings weighing on Fed hawkishness. This is what's pushing the dollar up, and you'd expect that to influence gold by decreasing the value of gold, We didn't see that. We've actually seen gold fly. And that's because it's geopolitical reasons driving gold's ascent. There's a brief lesson in economics and markets for you to understand for the rest of your life. Gold goes up when people are panicking, right? People buy gold when they think the world is ending, stock markets might collapse, governments might collapse, but at least this piece of gold will always and forever be a symbol of value. That's generally the panic philosophy as to why people buy gold. It's a fear button. It's a fear gauge, some people could say. It holds fundamental value across the centuries, even if governments collapse, even if economies collapse, even when the stock market goes down, gold has value. So it's the safety asset, people call it. And that's what's driving gold's price. So even though the risk of recession is being pushed back, which would be a bearish fundamental for gold, even though sticky US inflation is weighing on the Fed to kind of keep interest rates high, that's a bearish signal for gold. It's still going up. This tells you geopolitical stress is driving the bull market in gold right now. Okay? So that's something to keep in mind. Gold is flying up, not on sort of the dollar inflation fundamentals that affect gold, but because of the geopolitical stress markets are fearing, right? Turning to stocks. This is the S&P 500 continuous, so the US 500. In the first quarter of 2024, it gained 10%, quite comfortably. And it's an interesting one because it's a very, very common story we're seeing in markets at the moment, is that despite what actually happens in the data, markets are just always they're always just pricing in the best case scenario, right? So people have been talking about rate cuts now for the last few months, and with every inflation reading coming out, every single press conference from Jay Powell, it just gets pushed further and further back. So what drove the stock market performance in Q1 was, one, Nvidia once again beating expectations and doing what Nvidia does, and two, optimism around rate cuts in the back end of 2024. Right, recession's basically priced out of the market now on the back of strong GDP, on the back of a very strong labor market. The stock investors now are looking at the Fed and they're just waiting for that dovish signal, right? And that's what's driven stock market performance this year. AI hype, hopes of rate cuts. That's it. That's why stocks went up 10% in the first 3 months of 2024. Okay? And that brings us to FX and T-bonds. So the dollar, as you can see, is quite volatile and sensitive to the economic developments and sort of Fed positioning and Fed expectations. It's incredibly sensitive in ways other markets aren't. But ultimately, the dollar did finish Q1, considerably higher. Right, it's 2% in a currency. That's quite a lot in 3 months, just given the downs and ups you see on the chart behind me. The dollar, as I just kind of laid out for you in the stock market sort of explanation, the dollar goes up and down based on recession, based on interest rate cuts, and sort of geopolitical tensions secondary to both of those things. The data that we've had in Q1 of this year just pushes recession out of any considerable forecasts in the near term. Right, so we had the Q4 GDP readings, which said the final reading was 3.4%, and that was 0.2% higher than expected at 3.2%. We have inflation staying quite sticky, and this basically pushes the Fed rate cuts further and further back. All right, and that's why you're seeing the dollar climb on the back of like economic strength and Fed cuts being pushed back. That's what's influencing the dollar right now. That's what FX traders are looking for. That's why there's optimism around this little bump here that we saw in the last month and also at the beginning, is just strong GDP, strong labor market, awkward inflation, just signaling that there's just that strength in the US economy, in inflation. It's just going to be that high rate, solid growth outlook that we've just kind of seen since the end of July, right? And the same fundamentals drive the T-bond yields, right? Bond yields are climbing because recession's being pushed back, rate cuts are being pushed back, so bond yields are finding a lot of stability and support. Okay, so that's basically, vaguely, as a YouTube video, getting you up to speed on the first quarter of 2024, okay? What to think going forward, right? Projections for the future. As I said, all the stock market cares about right now is rate cuts, right? Recession's been priced out. People are now tuning into every FOMC speech. That's a Fed voting member speech, as we saw in the video I posted yesterday. Neil Kashkari got in front of a microphone and said, guys, if these inflation readings stay strong, we're not going to cut rates. And the entire stock index dropped 2% in a matter of hours, right? That's how important it is. That's what's driving stock index performance right now. That's what's driving the entire market up and down. Interest rates, interest rates, interest rates. Can the Fed cut? What's the economic environment looking like going into Q2, Q3, and the rest of the year? Will inflation come down? Can the Fed cut rates, right? That's what matters to the stock market. And whatever way the data falls on that sort of paradigm, so strong data, strong inflation, less chance of Fed cutting rates, that's gonna take out some of the soft landing optimism that's currently in the market. Okay, so you have to tune into inflation and Fed speak. That's what's driving the entire index right now. So thanks for tuning in. This is the Q1 2024 update and projections, what you need to be looking for. If you took some value from this, please subscribe, please like the video, etc. And I'll see you in the next one. Good luck.